Hello, welcome to Show You How To, and this is a channel where we talk about beauty and business. So, welcome to all the new subscribers. I thank you for you just coming here. Welcome to everyone else as well. So, today's going to be a great day. We're going to finish up this boring talk about all the legalities of business. Last week we spoke about LLCs. This week we're going to finish up with the other common business models. There are more models, but these are the common ones. I'm not a CPA. This is not legal advice. This is just based on my opinion and research. So let's get right into it. So the most common business, the most simplest business model is a sole proprietorship. And it is very simple. You do not have to file any documents with your state. It is not separate. It does not separate you as an entity. You can actually file it on your personal taxes. So when you're thinking about business, it's just gonna put you in a different tax bracket, or you just have to file for your taxes a different way. That's all a business is when you think about S corps and LLCs, right? So a sole proprietorship is the simplest business model. You just basically start your business. When you're doing your taxes, you keep all that information on your personal tax income. The only difference is that you will get a self-employment tax credit, which can give you an increase in your tax income. So there's no documents to be formed. It's just when you come to your taxes that will be a little bit different. So next we're going to go into partnership, and this is pretty self-explanatory as well. So you do have to do a few forms, and you do go through pass-through taxes. Um, uh, and this is also filed with your tax income. This is a partnership, so you can save money doing a partnership with someone because the finances are split in half. So that is another form that you can do. And then we also have the corporation. And the corporation is a little bit different when you think about companies like Coca-Cola, you think about companies like Apple and Walmart. So those are great examples of corporation. Also, corporations, they have shareholders, they have stocks as well, and they are high risk business. So if you think about like a plastic surgeon, doctor, dental care, those are high risk business. So they decide to form a C corporation to protect them from liabilities. So the last one is an S corporation, and this is just a tax status. So an LLC company can file for a S corporation tax status. So with that being said, let's get into it. So the thing is with the S corporation, why people feel like they may save money is because you have a choice. Well, you don't have a choice. You pay yourself as the owner of a business. So say you own a dental care and you have an S corporation, you basically pay yourself a fair salary. The salary has to be fair, right? Because you do not want to say pay yourself $20,000 as a dental care place, right? You definitely do not want to do that. You want to pay yourself based on the average for your state, what the IRS deems as fair, right? Otherwise, you will get audited. So you pay yourself a salary, then the rest of the income that you earn, it goes into a thing called distribution. So say you made $100,000 as a company and you decide to pay yourself a salary of $40,000, and you have a distribution fee of $60,000 that is left. That distribution fee is then taxed at a lower tax rate. And in the end, as a S corporation, some people end up saving a great amount on their taxes. Some people end up saving thousands of dollars on their taxes. But with that being said, when you have a S corporation set up, you also have to have accounting, payroll, and different factors set up as well. So when you have those factors set up, if you have an accountant set up, if you have payroll set up, you have to pay a fee for that, which in turn can be a couple $1,000s. So you have to see if it's really worth it. If you're able to do accounting yourself, if you're able to do payroll yourself, you can save in that way. So with that being said, the S corporation, it is taxed in a different way. So it is taxed basically on the rate that you paid yourself, but it has to be a fair rate. And then it is taxed a smaller tax fee. So yeah, then you're taxed a smaller tax fee, which is on your distribution, right? So if you make $100,000 as a company, you pay yourself a salary of $40,000. Then you have $60,000, that is then taxed as a distribution, right? And the tax rate you pay is a lot smaller. So that's how S corporations save money sometimes. But you do have to pay an accounting fee, you do have to pay payroll, and so many other different things. So that is something to consider as well. So you have to do what's best for your business. Sometimes it's best to file as an LLC. Sometimes it's best to file as an S corporation. You can choose that tax way, right? It depends on how much you make. If I had to do it all again, I would have started off as a sole proprietorship. And then I would have went into S corporation, and then I would have did a LLC, because with LLCs you do have to pay certain fees, and it doesn't make any sense as a small business to pay those fees. Like, you can just save money and not pay those fees. So that's how I would have did mine. So you definitely want to make the best choice for you. One thing I do want to remind you of is that if you do have assets, if you do have a house, if you do have cars and trust and money, from a family member that a family member left you, then you do want to protect that with an LLC, right? But if you have no assets, then you can start off as a sole proprietor. You can work your way up and become an LLC as a small business as your business grows. They say it's good to file LLC status probably when you make $50 to $100,000, right? Then you have certain things you want to protect. One thing I also want to remind you, when you do have a LLC, right, you have to make sure you separate your pay. So you want to make sure you have a separate business bank account. I can't express that enough, because if you do not separate that information, you still can get sued and people can take that money even though you have an LLC. It's called breaking through the glass ceiling. So you want to make sure that you have those separate documents. If it's all in one bank account, then they're going to go after that one bank account. So you want to make sure you're still separating your documents. I want to thank you guys so much for listening. I will have more exciting videos. Next week, we're going to go into how to find a vendor. It's super duper easy, and we're going to continue to grow. I pray that your business is blessed and prosperous, and you can do this. If you have any questions, please leave it below.